All right, what's going on, everyone? Good morning and happy Monday. We got a little pop here in the S&P futures. Let's see, S&P is up about 0.5%. You got the NQ up about 1/4. We are coming into a couple different layers of resistance, though. So my key level for you guys today is going to be 43.80. 43.80 on the S&P futures. So as far as resistance, we have the daily 21, which I'm told is a big one. And then for the quant pivots here, we're coming up on that daily H1. So as far as the stats go, we will touch H1 only about 30% of the time. We will close above H1 only about 20% of the time. Meaning more often than not, there's about an 80% chance that potentially, as far as a pop this morning, that might be all she wrote. So daily 21 EMA, the daily H1, and then if we bump down to the hourly, we're also coming up here to the hourly 50. So for today, that's kind of my rule. Not to say I'm going to sit here and look for a day trade, but if I were looking for a day trade and I had a bit more of a bullish bias, I probably couldn't do anything here until we break through that 43.80. And where I think you want to be a bit more careful, nice little pre-market pop. Where I think you want to be a little bit careful with this pop, right now the big three score is -5. So the structure, the momentum, the stacked EMAs, the moving average crosses, everything as far as the daily chart goes, it still leans in the favor of the bears. If we're in a market where the score is +7, 8, 9, 10, then we're waking up, we're looking to buy the dip, we're looking for squeezes. -5 is no bueno. And then the RSP, equal weighted index. We're definitely not in a bullish market if the RSP is cranking out a -9, meaning you're 1 point away from the perfect short. So that's not great. If we check the small caps, the little guys, score for the IWM is also -9. So 1 point away from the perfect short. The Dow Jones. Dow Jones gets a -6. So if we check out the watch list columns here, who looks good? Oh, Google gets a 7. Meta gets a 7. Microsoft gets a 6. And that's kind of it. Nvidia's a 5, which, that's all right. If we're going to buy calls, I think we can do a little bit better than a 5. Apple's a 4. QQQ is 0. AMD 0. Semiconductor 0. So the first half of that list, couple of big tech names, and then XLK, QQQ. Few of them look really good. The rest are just kind of eh. From there, things get pretty ugly. IWM, Netflix, RSP -9. S&P's Dow Jones, the financial sector -6. Tesla -3, Amazon -2. So again, point being, we're in the furthest thing from what we had back in April and May. And just a good example of let the indicators lead the way. If we're back in April and May, and we're sitting here this morning looking at the scores together, things are going to look dramatically different back here. Like everybody's got that 8, 9, 10. The indices, the sectors, the leading names. We are not in that kind of market, my friends. Now, the one thing I think is going to be interesting this week, I'm not exactly sure who will. Do I have my list here? Let me see. I've got an earnings calendar somewhere. But with big earnings this week, Tesla, you got the Googles coming up, the Nvidias, Amazons. What I'm most curious to see is whether or not the earnings here have a positive or a negative impact on these weekly squeezes. You got the S&Ps, the QQQ, Meta, Nvidia, Microsoft, Amazon, Google. You got a lot of big things printing brand new weekly squeezes. And if you rewind the tape and you go back to March, April, May, that's pretty much what triggered the entire push. S&P had a beautiful weekly squeeze. Off she goes. QQQ, Netflix, Google. So here we are again. S&Ps, this will be week 2 of a weekly squeeze. Right now with a score of -1. Kind of tough to want to load up on calls. At the same time, though, kind of tough to want to load up on puts. You get a -8, 9, 10. All right, I can short it. We get a positive 8, 9, 10. All right, I can buy calls. They're throwing out a -1. In my opinion, not too much to do with that. But as far as earnings go, if things are a total disaster, down goes Tesla, down goes Google, Apple, etc. That's going to have a bit more of a negative influence on the S&Ps here. Apple goes down, Google goes down, Tesla goes down. Pretty good chance the S&Ps go down. And from here, you're going down in the context of a big squeeze. You all know the outcome from there. Now, in comparison, the QQQ weekly squeeze grades out much, much better. S&Ps are -1. So again, there's kind of nothing we can do with that. QQQ's got the +7. Structure is a little bit better. Momentum's a little bit better. Playing the probabilities game. Right now, there's a better chance this wants to fire long. So from there, I think it comes down to the earnings. Heading into earnings, Meta's got a beautiful weekly squeeze. I think you got to like everything about that weekly chart. First leg higher. Look how good it handles that first pullback. Apple didn't handle that pullback that good. Microsoft, Amazon. Back test of the 21. Structure holds. The signal prints. 10 out of 10. Now, if earnings are a dud, we could see Meta gapping down, and then maybe that squeeze tries to fire short. We have the big Google here, and Google actually fired the weekly squeeze. As of last week, everything checks out. Momentum looks good. Got a 9 out of 10. From that weekly squeeze, you're looking for a push towards 145-ish. So heading into earnings, this looks really good. But we know heading into earnings, the rest of the market, not so much. You got Nvidia. She is a beaut. 520-ish upside target. And then Tesla. Good momentum, buy signals, all the good stuff. So as far as a trade idea for today, nothing to do with those weekly squeezes. I'm showing these a bit more to say, pay attention. You don't want to give the squeeze your attention 2, 3, 4 weeks after it's fired. Meaning back here, if you're buying the S&Ps up here, now granted it might work, but as far as the easy part of that move, you're way too late. So to our benefit with the S&Ps, the Qs, etc., we have found these squeezes pretty early. And now the key from here on a day-to-day, week-by-week basis, just following the indicators. If next Monday the S&Ps are in a squeeze and the big 3 score changes to a -7, all right, I got to think that squeeze wants to break short. And I'm probably going to look for a short. We get through earnings, the dust settles. This is cranking out a +7. All right, I think we want to get long. So the only one that I think has a little bit of edge right now would be the QQQ weekly squeeze, grading out as a 7. It is the best of the best. But we know all of that can kind of, go to crap after earnings. So for those of y'all in the mastery, the game plan's pretty much the same. I'm really enjoying these weekly iron condors. They've been a nice placeholder while we're waiting for a bigger swing trade. So I really continue to like that balance. Throw those condors on Friday. Get the exit orders working for about 50% of max profit. And then you're looking for your chances to pounce. Last week we had Meta, nice daily squeeze. We're in on Monday, we're out on Tuesday. So I like that balance of you're looking for those shorter-lived opportunities to try to pounce on it, to try to call for maybe 1 or 2 days of strength, 1 or 2 days of weakness. And then aside from that, you smack on some condors, let the premium come in, and you keep your head above water. But all right, guys, big level here, 43.80. What they gonna do? What they gonna do? If the Bulls can push it and keep it above that 43.80, they might have a little bit of room here. But I would have to let somebody else buy it here for now. We're right up on that hourly 50. So it's one of those things where I could buy the call right now. And if we're up here at 44.30 later, hallelujah. Or I could buy the call here at the falling 50 and then get served a little something like that. Big pop into resistance. Back down she goes. So the thinking for me would be have the willingness to be late. I don't think in this market you got to be the first guy or gal to get long. Let them break it. Break it as good as they can. Then you try to buy that first pullback. 43.80 is resistance. Let them rip it through resistance. And then from there, on any pullback, any dip, you just want to see 43.80 now be support. They pump it. They pull it back a little bit. Everything holds steady. Now I think you're clear for the long. Versus fighting the good fight right at that 50. But all right, folks, any chart requests, anything you want to look at? I don't have too much of a watch list for you right now. Kind of get through earnings and see what's up from there. Claudia, correct. Yep, bingo. So Mike, so for SPX, we have got we're short the 42.20 puts. Let me get the daily up here. So we got the 42.20 short puts, basically placing a bet that we're not going to flush below the 200. And then we're up here around 44.50 on the call side. If it all works out, this will be week number 4. Got ourselves a little condor streak going. I'll show you guys what I'm basing it off of, though. Let's see, quant pivots. Let's go weekly. So on Friday, maybe 15, 20, 25 minutes before the close. Admittedly, I did it a lot earlier this last Friday. But you wait towards the close. You throw on the next period projections. So weekly projections. All right. Now, subject to change. This can change, at the open today. But Friday afternoon, you throw on the projections. It looks like the close projections are 44.25 for weekly H2, so we're above that. And then we're looking at weekly L2 at 42.40, so we are below that as well. Now, the actual weekly levels will change once the market opens this morning, but that's what we're doing on the Fridays. For all of you listening in, what do you think? Do you think we're going to blow through 43.80 and it's a short squeeze kind of day? Or do you think we get rejected here at the goal line? McGurr, that's all in the mastery. Mike, you are short Apple. So right now, Apple gets a 4. Am I going to wake up and get long a 4? No, probably not. I'm going to look for a 9, 10, maybe an 8. But I'm also not going to short a 4. Like for my swing trades, I'm looking for as much edge as possible. I think the tougher thing here about being short Apple, at least for now, the QQQ, out of all the indices, out of all the sectors, and it's not great, right? It's not great, but it is a little bit better than the rest. The Metas, the Googles, and Microsofts, they look better than most things in the market. So to the extent that continues, the outperformance in the tech stocks could make being short anything, tech related a little bit tough. And then my real thinking, guys, for this week is any swing trade, especially if you're swing trading a tech stock, I think you want to look at that as a lotto trade. Apple could have, sell signals up the wazoo. But then if Tesla just destroys earnings and gaps up 20% on on Thursday, yeah, being short Apple might be a little bit tough. Vice versa, Apple could have nothing but buy signals. Tesla, Google totally bomb after earnings, and down goes Apple. So my thinking is it's probably going to be a tricky week for swing trades. Now, admittedly, the only thing I would want to get long, you go through the financials, you go through healthcare, energy, technology. Right now, the only thing I'd want to get long is tech. For me, kind of tough to do that ahead of earnings. So again, this week for me is kind of going to be all right, I got my condor on. If I can take home my 50% of max profit, that's good for maybe 1%. Can I find maybe 1 or 2 more trades in between? In other words, I'm not viewing this week as I'm going to hit a home run this week. I'm going to find a squeeze. I'm going to put 10, 12% of my account into it. I'm thinking until at least earnings is over, let me try to grind out that baseline 2% goal, and then try to save the chips for a better day, for a sunnier day. So, RK, we're going to push an update here sometime within the next couple of weeks. So when the upgrade is pushed, we'll give you a new flex grid, and then everything will match for you. However, I did put the script for the big 3 score columns in the mastery. So the script for that is in the room drive. All right, futures. Let's see. 43.78. The rally is over, guys. Now, one thing to be mindful of with the quant pivots, what I've noticed is where we're a bit more liable to hit those extremes, daily H1, daily H2, is if a lot of folks are trapped short. Like if everyone and their mama's got puts, and then the short squeeze unfolds, that's a day where you're going to get a bigger than average move. Figured I would mention. $43.90-ish trailing ATR. Ryan, what time frame is that on? Now, for all my swing traders in here, I don't want to get you excited, but we do have a brand new daily squeeze. What I would love to see is, can we squeeze for 2, 3, maybe 4 days? From there, you tend to get some of your best swing trading. Daily squeeze, off she goes. A very short-lived daily squeeze, just 2 days, but off she goes. Another short-lived daily squeeze. You were only in the squeeze for 3 days, but down she goes. A 1-dot squeeze, kind of weird. But I would love to see this just, 2, 3, 4, 5 days of compression. Next thing you know, you get some swing trading ahead of you. It's a beautiful sight. A beautiful sight. All right, let me jump over to YouTube. Good morning, Bill. How's energy looking to me? Let us take a look. Let me get rid of the quant pivots. We'll clean things up here a tad. I don't love energy, but I will give it credit. It's pretty resilient here. I thought back here, they kind of put a knife in it. Take out the 21, take out the 50, squeeze fire short. I'm not saying I'd be in a rush to buy energy, but definitely a pretty impressive rebound. Back above the 50, back above the 21. They canceled the daily sell signal. What I would like to find is something in energy that looks a little bit better than XLE. It would not be ExxonMobil. -3 versus a +4. Could it be Oxy? No, Oxy's pretty much the same. Could it be Chevron? Come on, toss. Chevron's a 1. Check a few more here. EOG. EOG's a 6. All right, a little bit better. For now, here's how I got to look at it. I got to start with the overall market first. I'm going to check the S&P 500. So for sake of conversation, say that I'm thinking about getting long energy. Before I get long energy, first thing I got to check is the quality of the market. If the market looks like it did back here, 8s, 9s, 10s, buy signals, good momentum, I'm looking to get long. And if in that kind of market, if the energy sector is cranking out A+ setups, then I'm all about it. I've got the perfect marriage. I've got great setups, and I got a really good market. Right now, I don't have a really good market. As far as, hey, go out there and get long. S&P's get a -6. RSP gets a -9. So I don't love the backdrop, so to say. And then energy itself is only a 4. So for a swing trade, I'm looking for a market where the score is either very bullish or very bearish. And then as far as the individual stocks, I'm looking for things that also match up. Makes it a little bit tricky right now. Yeah, Fly Guy. I think it's a good time of year to pay attention to the website and look out for the sales. I think they're doing an October sale right now. And then I'd imagine between now and the end of the year, maybe a Black Friday sale, Cyber Monday, little Christmas special. So yeah, my friend, I'd imagine a few more sales between now and the end of the year. My man Terry, good morning, Terry. Always good to see you. So Jay Cameron, good question, really good question. So the reason that I like to do the condors for the following Friday, so sell it on Friday for the following Friday. The first thing that I like about that is by the time the market opens on Monday, you've already quote unquote gotten 2 days of free premium decay. Right, Saturday, Sunday. By the time things open up on Monday, if we open up flat, you already got a little bit of credit coming in. And then what I also like about it is I'm trying to strike a balance between risk reward and probabilities. Meaning we could put on a very high probability condor, go deep, deep, deep out the money, give ourselves a 98% chance of success, but the risk reward is going to be god awful. What I like about the Friday condors is there's enough time and enough premium to me to find that happy balance. I can go far enough out the money with the short call and the short put to where I feel like it's a good high probability trade. But because those options have still got plenty of time, I'm also getting a pretty good credit. So I'm trying to find that balance of, all right, I'm getting a good credit, while at the same time there's a pretty good chance price is not going to get there. So if I were to take the same levels and do a condor on Monday's expiration, it'd be a higher probability trade. It'd be a worse risk reward, if that makes sense. But all right, folks, one more look here at the futures, and then I shall let you go. We are glued to 43.80. So again, that's my advice for you. If you happen to be looking for a day trade or any kind of trade, you're trying to figure out long or short, I would really anchor to that 43.80. Daily 21 EMA, daily H1, hourly 50. A lot of room for shenanigans. If I'm gonna get long, my preference is let them pump it, and pump it, and then I'll try to buy that first dip. If they're kind of fighting the good fight right at 43.80, I don't want to get caught up in the crossfire. Don't want to dirty up my sneakers. But all right, folks, as always, thank you for your time. Always nice hanging out with you for a bit on a Monday. All right, let me think of the schedule here. So I'll be back in here for pre-market prep on Wednesday. And then for you folks in the mastery, same schedule as always. Wednesday, Thursday, Friday, 10:30 Central. But all right, folks, have a good day. Trade safe. Talk to you soon. Adios.